This is how I made $16,731.08 today, day trading the Nasdaq and S&P 500 this morning. um, Honestly, great win today. A little bit more risky of a trade. This is the I just switched to TradeSyncer. This is like the um, P&L. I actually really like TradeSyncer. It's doing really well for me. Um, and I like just recently found out all the perks to it. I just found out it had its journal in it too. Super cool platform. Definitely worth the money if you're thinking about it. But I'm in a hotel right now, still on that grind, bro. The grind never stops. So let's get right into it. Let's get in these charts. All right. So we took the trade on Nasdaq this morning. Um, it was a good trade. This is marked out for uh, alternative trade, but um, pretty good trade overall. Not my favorite, because actually coming into the day, I was a little bit bearish, and the reason why was because coming into market open, we kind of had this steep sell off. However, when market was opening, we were already getting this retrace, and I kind of wanted us to see I kind of wanted to see us like fill this equilibrium or sweep these session highs and then move lower and take out these two equal lows down here. But today was actually the first day of December that we actually had really good price action. Um, and We clearly wanted those highs. And I think the reason that made me like kind of switch my bias was when we filled 5 minute equilibrium to the upside, um, and like inversed a lot of bearish fair value gaps. And then on top of that, on the 1 minute, but we'll get into that. So my original bias did play out where I wanted to see these session highs get swept. We had just hourly liquidity over here. This is actually a daily high. This one, I wanted to see that get swept too, but it didn't end up getting swept. But definitely those hourly highs, strong draws on liquidity. We had already swept this hourly high coming into market open in the previous day. So again, we had kind of a sell off. So I wanted to see us. We came up, retest those highs, and we had another sell off. I wanted to see us come sweep session highs up here and then move lower. But that did happen on both indexes. We came up, swept session highs, had a good bearish response, and I marked out 5 minute equilibrium to see if we could close underneath 5 minute equilibrium. And we had some aggressive sell-off, an aggressive sell-off when market opened. And oops, let's clean up this chart a little bit though. This is so ugly. So yeah, we came up and swept these highs, and oh, real quick, sorry, but let me take a screenshot of this because I need this for my journal. Sorry, you guys are gonna have to watch me do this. But I do need this for my journal before I clear everything. But we had such bullish pressure out of 5 minute equilibrium that honestly my bias kind of flipped to being open to longs. But you'll see that I didn't want to take longs until ES closed above the session highs. So we swept highs, swept previous liquidity. I marked out 5 minute equilibrium. We clearly closed above it, very bullish. ES failed to get to equilibrium down here, and that was one of the reasons why I took the trade on. I'm actually going to leave one of those session high up because that's my 1 minute bias. We actually did leave ES's equilibrium untouched, and we did not fill it, which is important to note because that's actually one of the reasons I took the trade on NQ. So I'm going to go ahead and clear that, but we did fill, obviously, this 5 minute fair value gap on both indexes. Really beautiful fill on the 5 minutes. Again, NQ filled 5-minute equilibrium. So I did scale down when we filled the 5-minute equilibrium and we filled that 5-minute fair value gap. Scaled down. And what I wanted to see from here was, okay, oh, this was for potential retrace, what we can get. Okay, so we inverse this top fair value gap. Doesn't really mean anything for us. We have this huge fair value gap that we maintain bullish pressure in. Okay. Then ES. Oh man, where is this? Oh, it's right here. I'm gonna mark back out 9:30. Then ES also did not inverse that fair value gap, filled this 1 minute and this 5 minute. If you can see this, so this was a 5 minute fair value gap that got filled, but then also this 1 minute, like perfectly got filled. Super small 1 minute got filled, bullish pressure out. So technically, all I would need then to enter a trade is a 1 minute break of structure. But I was a little nervous that we had swept these session highs. So I wanted to wait to see what would happen along with creating this bearish fair value gap. We inversed a bearish fair value gap, but I wanted to see us inverse this one before we entered the trade. Now you're probably looking at this saying, well, that makes 0 sense, Tate. You entered before it inversed. Well, the reason being, we entered at 9:49. And technically, we could have entered the trade here on ES if we wanted to. 1 minute break structure, target the highs, stops down here, right? Now, the reason I didn't enter was because I wanted to see us close above this session high on ES. We were still under it on NQ by a fair amount. So we were under it on NQ by a decent amount. We had a 1 minute bearish SMT actually. I wanted to make sure we weren't going to go form a 5 minute bearish SMT and break structure to the downside on the 5 minute. So I waited to get a 1 minute candle closure above that session high, which did happen on the 9:49 close candle. It looks like it's equal. It's dead equal. But that closing right there, not wicking above and showing bearish pressure, was enough for me to be okay with entering. And also the 5 minute actually closed the same. So closed right there. And that is officially a 5 minute, did not, as you can see, I mean, it's clearly closing above the 79% extension. That is clearly maintaining bullish structure. So I entered long. Actually, one thing that I should have checked was this actually, it looks like, did not break 79% extension in the 5 minute. I don't know if it did, but I probably should have thought of that because that would also confirm bullish on NQ. But anyways, I entered for multiple reasons. One, filled fair value gap perfectly, filled 1 minute fair value gap perfectly, inversed this first fair value gap. I didn't want to enter off of it. Then we even came back, had a negative candle. I love this. Had a negative candle, retested that fair value gap, that inverse, and then a bullish candle out of it. And at the same minute, ES closed above the session high, and you're good. You can come out if you want. Yeah, we closed above the session high. So I entered stops below this bullish fair value gap, simply because I wanted to give some breathing room in case it wanted to come get filled. My stops originally were down here, but I actually moved them up because I was seeing, we obviously we closed even above the potential 5 minute SMT on the 1 minute up here. At that point, I'm pretty confident that this trade is obviously going to hit take profit. We're getting even close to that liquidity, and it is the closest form of liquidity up here. Lots of it, lots of hourly highs. This was a daily high. I did want to see this daily high get swept, but I just kept a trailing stop because ultimately this was my full trade for a 1 to 2.5, which is actually really, really good risk to reward. So there was really no reason for me to be targeting these highs with a lot of leverage still on the table. So I just had two runners and kept my, for funded accounts, man, keep your runners running. So I kept my runners running and a tight trailing stop and stopped out right at 10.19. Still even above my technically last take profit for a total of 1 to 2.8 risk reward. Great exit, actually, it turned out. And we would have gotten stopped out of break even if we hadn't. Not that I probably would have kept my stops at break even. I probably would have on a live. But tight trailing stop on a funded, sure. So yes, this was on an eval. So 16K though on the day. 16.7, so almost 17K. Good trade. Kind of textbook, honestly. Filled 5-minute equilibrium, 5-minute fair value gap, inversed a 1-minute bearish fair value gap, target previous highs. It's honestly textbook, A+ setup. Again, the only concern was we're entering right at a second 1-minute bearish fair value gap, and then also the potential of a 5-minute SMT. But again, eval, you can enter a little bit early and be a little bit more risky. But yeah, ultimately a good trade. I think that if this was a live account, I would have wanted to wait for more confirmation of that 1-minute inverse for value gap. And I guess that would have meant waiting till I think 9:52, which obviously wouldn't have really flipped our buy or flipped our risk reward that much. But with that candle, I probably would have had stops here on a live. Down here is a little bit much, but I mean you could do this if you wanted to. Again, just making the risk to reward a little bit lower though. Ultimately though, we had this probably would have been optimal live trade, but sometimes entering early actually plays out for a better risk reward, better entry, better break even point, and 16 racks on the day. So that's pretty much it. But yeah, we on that grind, we're on that December grind. But price action is going to slow down here coming soon. I personally am not trading past December 15th because of price action. It's going to slow down for the holidays, so be aware of that. Bad price action, bad non-optimal to trade in, so keep that in mind. I'm not trading past December 15th personally. And honestly, December 10th, once I pass these evals, low-key, I'm not trading for December. So two more days of really good trades. But I would prefer to split that up to more 3 or 4 good trades. Because I'm only risking 500 per eval, but hopefully we pass these evals soon. And hopefully that is before the new year, because I want to go into the new year with, holy shit, but 8 fucking funded accounts, so that I can be copy trading all of them and be pocketing all of this cash. So P&L probably going to be going down for a little bit. I'm going to be de-risking, and then January going to be de-risking. September, hopefully I will be able to scale up. But if not, I'll probably be sitting around more 5K trade, 5K, probably somewhere around, let me see, 500 times 8, somewhere around probably 5K to 7K days is what we're probably going to be seeing more of. Today was kind of a high risk reward, usually more a 1.5. So anyways, lower P&Ls coming soon in the titles, but cash is cash. So, all right.